that these were strategic imperatives, that we would deepen our client intimacy, continue that work which is important to us. We continue to cross-sell our business lines, increase market share, expand core revenue, and increase efficiency. Well, what I would like to report on, how is it that we did in relationship to these imperatives. Firstly, in terms of client intimacy, which is measured through our client surveys, which are done by independent research services, namely Tricor, and the critical client truths in Jamaica are, for JMMB in measuring, 90% of our clients felt that JMMB was the best financial institution in Jamaica. 93% of clients state that they actively encourage others to become clients. 85% of JMB customers stated that they feel that they are a part of the JMB family. 77% of clients feel that JMB sets a standard by which all other financial institutions should be judged. Anyway, this takes work. It takes work, and our culture supports this environment that we have. And through our human resource team and culture team, they put on several workshops, the JMMB workshop, the JMB Way workshop, how we go about delivering service, how we go about interacting internally and externally, our sales competency development, and our client intimacy day in November 2010. However, we still recognize that we need to increase the level of frequency in contact with our clients, because we have such a large client base. We have to get really creative and really innovative, and to see how we can ensure that we engage our clients and we stay in communication with our clients in delivering our products and services. So we will say we are a little challenged in this regard, but we continue to work around in that area. In terms, we said that we'd grow our core revenues, and core revenues excludes any one-off gains that we will take, or gains from our proprietary portfolio. And we actually grew our core revenues from $2.1 billion to $2.8 billion. So therefore, this came mainly from our growth in our net interest income, growth in other fees and commissions, growth in our Cambio, growth from our insurance brokering, growth in our equity volumes traded, and our growth in our pension fund under management. So these are, and this includes other business lines, new business lines that we are developing, which are finally coming around in terms of they're taking root, and our front line is able to deliver with some level of confidence our new products and services and new business lines. Our cross-selling efforts, as I said, due to the confidence, we have made serious progress in this area, as I just said. Now, we said that we would increase our dividends, and we did. In 2010, 2009, 2010, we paid our dividends of $176 million. In 2011, we paid $205 million. And the plan is to continue down this road. Okay. In terms of our efficiency ratio, our group efficiency ratio, we said we wanted to grow our revenues faster than we grow our expenses, and we did. And therefore, our efficiency ratio improved from 67% to 63%. We want to keep it moving in this direction. So therefore, we committed, we shared the imperatives with you, and we delivered in deepening our client intimacy, expanding cross-selling, improved efficiency ratio, and increased dividends. So, we're not going to clap for that. We must wake up, man. Any coffee around here anywhere? Okay, moving on. Therefore, let's analyze the results for 10-11. Let's see where we are. Well, one of the most two areas jump out at us in the 2010-2011 results. Firstly, that our operated profits grew from $1 billion to $1.5 billion. Our operating profits. So that's like a 50% increase in operating profit. That's profit before taxation, right? So that's a great result, I would say. Our operating revenues grew from $3.1 billion to $4.07 billion. That's a $1 billion growth rate in our operating revenues. However, our net profit after tax grew from $986 to $1.104 billion, only an increase of 14% in profitability. This is due to the higher taxation which was paid in the period. So taxation moved from 41 million to $376 million. So therefore, while the business performed, significantly improved in performance, that we had to pay over our taxes to ensure that children can go to school and we can pay for the health services, right? Our return on equity was at 14%, and as we said to you before, we would like that to remain in the 15 to 20% range. However, our equity base grew significantly during the year from retained earnings and from a revaluation, from an improvement in prices in the GOJ bond prices. Our revaluation reserve increased by 825 million. So if you were to remove those, then we would have been in the 15 to 20% range. We're probably around 15–16% in terms of our return on equity. Our net interest income grew from 1.92 billion to 2.5 billion. Gain on securities traded contributed 1.23 billion, and other revenues from other business lines contributed 338 million. When you analyze further analyze the growth in revenues and the gain on securities traded, which increased from 962 million to 1.23 billion, that's selling of securities into the market. The decline in interest rates over the period, while GOJ Globals and for GOJ Globals and also for domestic debt, clients were there were attractive yields on these bonds, and clients moved away from, as the short-term rates reduced, then clients looked to buy securities and investors looked to buy securities, and therefore this is reflected in our gains on securities traded line item, because as you sell securities, this is the line item that is reflected in. It's a gain on securities traded. So in the primary market and in the secondary market trading of GOJ securities in the main. And this also, in terms of clients looking to position their portfolios in terms of more active management of portfolio and looking for higher returns, because when interest rates have gotten as low as 3, 4, and 5, and 6% in Jamaican and US terms, then clients are looking for higher returns, and therefore they're looking to purchase bonds, looking to equities, and looking for a more active portfolio management strategy, which we can speak about a little later. I spoke about our client base, our capital base growing from 6.9 billion to 9.3 billion, a healthy improvement in our capital base. And this was reflected in our retained earnings moved from 7.3 billion to 8.2 billion, and our revaluation reserve, which improved by 25 million. We had a decline in our asset base as we looked to sell securities and pay out volatile funding and other funding, which reduced our asset base to 113 billion. And decline our funds under management in terms of our client base. This is because clients moved into buying other securities outside of repurchase agreements and money market products, which would remain on our balance sheet, but they moved to take the risk on for themselves and to purchase their securities, their bonds, their equities, and hold in their portfolio. And we are giving them the service of helping them to manage their portfolio so that they can do it in a way which they manage their return with their risk, and also therefore that's an important service to JMMB as we go forward, the portfolio management. Our book value per unit, significant increase over the previous financial year. Our book value in Jamaican terms are at the highest level from the inception of JMMB. We're at $6.43 at the end of the financial year. It's now at $7.54, so therefore the JMMB as an entity is growing and continuing to move, right? But so we're going to work it out in US terms, all right, so? JMMB's share price on the JSE, while the index moved 9.75%, from the end of the financial year from March 31st to September 9th, JMMB share price moved 140% for the period. I guess some people saw value. So at a price of $10, this is what the movement is. The current price to book ratio for the stock is 1.3. The five-year historical average for the price to book ratio is about 1.6, so you could say that we're relatively cheap in terms of the historical. But when you look at us compared to market, we're right in the range of market, where BNS, their price to book is 1.31, NCB 1.17, Mayberry 1.18, Sagicor 1.18, Pan Caribbean 1.2. So we're right in that range, and also within the in the price to earnings ratio. However, this doesn't take into account the JMMB strategic imperatives and initiatives to move us to the next level in terms of acquisitions and other opportunities and in Jamaica and across the region. So we think that their JMMB still represents great value. Now, as we said, people have been seeing the value on what has been occurring with JMMB. So when JMMB was trading at $4, they said some people got really busy. And we saw a lot of institutional buying coming from hedge funds out of Cayman. And if you look at the shareholding and even our top 20 listing, you'll see other local institutional clients. You'll see Mayberry. And guess what? The big guy in the block, NCB Capital Markets, have taken a huge position. We're going to talk about this a little later, right? No, we can't talk about it right now, right? So NCB Capital Markets, now, when they took that position, you know, it was a surprise for all of us, right? However, they saw value and they went for it. In discussions that we have had, and they have agreed that there will be no director on the board from NCB Capital Markets because that will represent a conflict of interest, right? And therefore they have agreed, so they actually put that to us that they want none. It's a straight portfolio investment for them. They said they have seen the value, and based on JMB's strategic moves, they are confident that we are going to deliver profitability to their bottom line, and therefore it's a straight portfolio investment for them. It's kind of hard to work for the competition, but what are you going to do? They purchased 29%, right? They have also put in writing that they have no intention to take control or acquire majority shareholdings in JMMB. That is in writing from NCB Capital Markets also. However, we continue to speak and continue to ensure that we have an agreement, and we continue to deliberate with the regulators also around this matter. Right? In terms of JMMB Jamaica's business lines, when we look at the asset management area, as we said, our funds under management for corporate and retail fell off about 4.9%. This we put down to, one, as we said, paying out volatile funding, and secondly, also clients moving off balance sheet. And as we move forward, we're going to be looking to measure on and off balance sheet, because we're actively supporting clients to buy their own securities, because if they remain in the short term, their returns are going to be short-term returns. If they look to purchase long-term securities and actually manage a portfolio, a diverse portfolio of bonds, equities, and short-term instruments, then they can look to achieve higher returns, and returns which will be greater than inflation. But we're going to give them the support to enable them to meet higher returns. But this will actually take their assets off JMMB's balance sheet, and it will be owned by the clients, but we will actively assist them in managing their individual portfolios.